Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Tech tariff pause. President Trump exempts phones, computers, and popular consumer electronics from his 125% China tariffs, but says it's only temporary and a different levy will soon apply to the sector. We'll have market insights from Schonfeld's Mitesh Parikh. Talks extended. Iran labels its first formal discussions with the Trump administration over its nuclear program as constructive, with the two sides to meet again in a week. And coming up, Lebanon's economy minister Amer Bisat joins us exclusively for his first international media interview since taking the role to share his economic outlook and discussions with the IMF. Well, it's just gone 8 a.m. across the Emirates. I'm Amer Bisat in Dubai. I hope everyone is ready, geared up for another massive trading week, because it is going to be volatile. Because guess what? When Trump gives with one hand, he takes away with the other. What we got late Friday evening was this announcement that certain consumer electronics, computers, the consumer goods imported from China would be exempt from those tariffs, that 125% rate, only to find out over the course of the weekend that the exemption itself was going to be temporary and that they were still thinking about tariffs and specific sector tariffs on those parts of the market. With Trump tweeting out this morning a posting on Truth Social, nobody is getting off the hook for the unfair trade balances and non-monetary tariff barriers that other countries have used against us. So once again, doubling down. That being said, it was enough to lift market sentiment. And you can see this morning, S&P and NASDAQ futures are leaning towards the green, up about 0.9%, 1.4%. I would say probably you would see more green on the board if it hadn't been for the walk back. But still, we are picking up from the very positive session that we had on Friday. And for the week, by the way, I should mention, by the end of that roller coaster week, the S&P was up 6%, NASDAQ up more than 7%. So it did actually turn out to be quite a bullish week for U.S. equities. European markets, take a look at this. Futures pointing to a very strong open there as well, 2.5% higher. And then the handover from most of the Asia-Pacific indices that we track, also pretty positive today as well. So equities trading in the green. As for other assets, all eyes, of course, on what's been happening with the U.S. bond market. And what you're seeing today is somewhat of a stabilization. We've got 10-year yields trading below 4.5 now. 4.446 is where we're at, about 3 basis points lower. But, of course, keeping a close eye on developments there, namely because we moved up about 50 basis points throughout the course of last week. That correlation of equities down and rates rallying has seemed to have broken down in the middle of the week. But what we're seeing now is at least some signs of stabilization. Does that continue is going to be a big question for participants from here onwards. Take a look at the euro as well. The dollar continues to be sold. We're at the lows of the year. Euro at almost 114 now, so another tenth of a percent firmer. All eyes this week will be on that ECB meeting and whether they do go for the rate cut, what they say about guidance looking ahead, and the impact that these tariffs are going to have both on the European growth trajectory, but also the inflation profile as well. So that's euro this morning. Brent also seeing some form of stabilization, but still just shy of $65. We're about 0.3% weaker, close to 4-year lows for the oil complex. So keep an eye on what happens there vis-a-vis how global demand is really panning out in terms of what people are expecting for energy and the supply energy demand mix over there. And then finally, gold. This morning, once again, got to all-time highs. We're just sitting above $3,200 here. 232 is where we're at. Slightly weaker on the session, but still money keeps going into that safe haven in an absence of, I would say, perhaps other safe havens around the world right now with the dollar getting sold. Okay, let's check in on how markets in Asia are faring this morning as well. Avril is in our Singapore studio. For the most part, Avril, we're talking about a positive reaction and market participants reacting quite well to the news that there may be some exemptions applied to consumer electronics and goods.
Yeah, exemptions, but Trump and his team also seem to be suggesting that some of this is going to be temporary. So even though you're seeing Asia stocks tracking the bounce in U.S. futures, it's not quite enough to erase the declines of last week. And on top of that, we're actually seeing tech chip names actually pairing gains from earlier on in the session. Now, we also had trade data out of China today, and it showed the strong export surge. But some have already attributed this to front loading, and you also have the likes of Goldman that for the second time this month cut its China stock target. So it's more negative than positive in terms of news flow, but we are, after all, seeing a rebound in Asia stocks. Taking a look at the yen as well, it is pairing some of the gains from earlier. BOJ's Ueda speaking today and suggesting that, we're not going to see a rate hike at the next policy meeting. So a bit of a knee-jerk response. But given how the dollar has been slumping, most still think that the yen's path is one of strength.
Yeah, and not just the yen, we're keeping an eye on the yuan fixing as well, with the fixing coming in above 721. We'll talk about that later, Avril, but thank you for the overview, Avril Hong in Singapore. Now, President Trump has pledged that U.S. tariffs will be imposed on phones, computers, and popular consumer electronics, despite a temporary exemption announced on Friday. So difficult to keep up with. For more, let's bring in Bloomberg News senior editor Brian Fowler. Brian, maybe just walk us through what we learned from the Trump administration over the course of the weekend, because that exemption announcement came through late Friday evening. And then yesterday we found out that it was only going to be temporary in nature. What do we know about the scope of exactly what's going to be applied and how long it's going to last for?
Yeah, well, first of all, I would say that massive uncertainty seems to be the new normal for this market. So when we got that news on Friday, we had a big bullish response. It's a huge news for Apple and NVIDIA to have a 90-day pause on these tariffs that affect China. And I think it shows recognition on the part of the White House that these companies cannot simply remake their supply chains overnight. They need some time to prepare, and I'm not even sure that 90 days is going to be enough for them. But for the time being, it was a very bullish factor for them, and it looked like a good sign that Trump was recognizing reality. But then he came, as you said, he came back on Sunday and he said, no, this is a temporary thing. No one gets off the hook. Those tariffs will take effect after the 90-day reprieve. So for now, the bullish sentiment is still carrying over somewhat, but of course, uncertainty is the biggest cloud hanging over the market.
Yeah, absolutely. Everyone is talking about that, the uncertainty and just the fact that really it is very unclear at this point what this Trump administration is actually going to end up imposing in terms of tariffs. But they're also talking about the potential for deals. And I thought it was interesting last week that Trump and many of the officials, senior White House officials, have said that Japan would be the top of the list in terms of countries that they're looking to make these trade tariff deals with. You're in Japan right now. We know that a delegation is planning on meeting with White House officials this week. Are we expecting some form of a deal? And would that come as a bit of a relief to some of these Japanese markets that you follow?
Yeah, so we're watching these talks very closely. Minister Akazawa is going to lead the negotiations from the Japan side, and he certainly wants to get some kind of reprieve, an exemption, or maybe a softening of both the reciprocal tariffs as well as the taxes on autos and auto parts. One thing we're also thinking about, though, is what is Japan taking to these meetings? And they've been very clear today or over the weekend that they are not going to use the massive holdings of treasuries as leverage. Japan has more than $1 trillion with U.S. treasuries, and if they wanted to create a problem, they could start selling these, and that would really worsen the fiscal situation for the U.S. But they've come out clearly and said that is not what they're going to do, and that's consistent with the other message we've had from them, which is retaliation is not something Japan wants to do. The one thing Japan could do is talk about security in Asia, which is a big factor for the U.S. as well as it eyes China's growing influence and role in the region. So that's one thing we would expect Japan to play up, as well as the massive investment from Japanese companies into the U.S. that's planned.
So more like a comprehensive deal, right? Not just economic, but perhaps including security as well. So interesting. Bloomberg's Brian Fowler, great to have you on the show. Now joining us is Mitesh Parikh, Global co-head of Discretionary Macro and Fixed Income at Schonfeld. What a week it's been for markets. It's really difficult to put it into words. Look, just looking at the market reaction today, and of course, we had the announcement Friday, then we had the walk back on Sunday. Futures are leaning towards the green, but it feels to me that it's going to be difficult to see a convincing rally in the absence of policy clarity from here on.
Yeah, thanks for having me on the show, Jemana, and great to see you. So, look, I think that's right. Ultimately, if you think about what we've seen across markets over the last week or so, just extraordinary volatility. we opened Sunday morning last week in Asia with actual more traditional risk off. Bonds had rallied, the dollar was stronger, we saw equities lower. But what's transpired over the course of last week was really this kind of reversal where the market's starting to price much more term premium into the back end of the US curves, which is understandable in these types of scenarios where actually there's just so much uncertainty around the Trump administration, the way in which they're handling tariffs, and the market's questioning, from what we were 2 months ago, max US exceptionalism now to kind of an unwinding of those moves. And that's natural when you think about kind of, what they've announced and where we are today.
So is this just an unwinding of positioning, or is this taking the view that US Inc. is not a place where you want to be positioned right now? I've read lots of notes about de-dollarization, about the shedding of dollar assets. Do you think that the damage is done from a medium-term perspective?
Well, I think that's probably right. I mean, if you think about this crisis as more a self-created crisis, I mean, that is technically an off-ramp for Trump kind of walking this back. That doesn't seem likely to be the case. We have seen, as we saw the market reaction last Wednesday, that there was some degree of a Trump put coming into the market when, bond market dysfunctionality forced the hand to some extent. Thankfully, there does seem to be some more rational voices in Scott Bessent within the White House, who's clearly getting a little bit more airtime. But look, I do think there is definitely a question mark here in terms of whether or not, these moves can continue and how deep the potential US recession is. If you think about, the top CEOs at any of these big firms now, I mean, just trying to make future planning decisions around CapEx, investment decisions becomes really difficult. And coming into the start of this year, you would have seen a lot of restocking, ahead of tariffs or potential tariffs. Now we have seen a divergence between hard data and soft data. The hard data so far has been okay, but I'd imagine the data of the next couple of months is going to be really important. And just as a parallel to that, the Fed are in a really difficult position. Because historically, whether it was COVID or whether it was 2018, when we've had instances of markets collapsing like this, there's always been a Fed put, because the Fed have been in a position to cut rates. I think with inflation expectations as high as they are now, just on Friday, Michigan, one-year inflation expectations at 6.7%. They are like highs from 1981. I mean, it makes it very difficult for the Fed ultimately to cut rates in this type of environment with the level of uncertainty that tariffs may bring.
Even though the market, of course, has been interpreting that as a steepener opportunity for the U.S. yield curve. Let me just ask you about the bond markets here. Barclays put out a note saying, forget equity market gyrations, stop staring at the screens. All of that takes a backseat for now to one thing, that is the U.S. bond market. Do you think that is valid? Is that what we need to be watching?
Yeah, I think that's right. Look, and to answer your previous question, we have seen a lot of liquidations, and I'd say mainly hedge fund type liquidations, places like swap spreads. Long swap spreads was a very popular position coming to the start of this year around SLR reform and various other things. So you have seen some traditional concentrated positions that have been reduced quite significantly. Bond basis, more kind of CTD type bond basis. There have been some ramifications there, more at the longer end of the curve. But what is really concerning is just the pace of these moves at the back end of the curve. Like, it's just, seeing the 30-year bond yield move 43 basis points week on week last year. I think it's, first time in 40 years. And actually, that's just a week on week move. Like, intra-week, we're having daily moves 13, 15 basis points. Lows to highs was almost 70 basis points. That has to create a real degree of uncertainty and dysfunctionality, and liquidity has completely dried up. And almost 400 different instruments, like globally fixed income instruments, are priced to US Treasuries. So I think that does have broader ramifications for other markets when you have the US so central in the system.
Given what you were saying earlier about the potential for US recession, we'll see whether the hard data starts matching up with the soft data. Would you buy then US Treasuries here? I mean, can US Treasuries stay this high in an environment where the US economy is contracting?
I think it's a great question. I think if you think about parallels to Brexit in the UK, I'd say to some degree this is some type of US-type Brexit. And if you think about what happened in Brexit, yes, like the UK economy slowed down, growth slowed down. It didn't collapse. The pound initially collapsed but kind of came back. The market now does demand a higher risk premium for gilts than it did historically. I think, again, we see this in markets all the time. We go from one extreme to another. I think the truth probably lies somewhere in between. I do think it's right that over the coming years, as a result of what's happened and the longer-term ramifications and the potential damage that's been caused now that will be longer lasting, that there is going to be more term premia for bonds. Do I think that bonds are a buy here? Probably not just yet. I think we've got to wait a little bit longer to kind of see.
Okay, let me just round up the discussion asking about the USD, because it is heavily sold. We're sitting at the lows of the year, and you look at all of these, RSI indicators, the bearish sentiment, all of that. It does seem as though position is extremely bearish right now on the USD. How does that turn around? Do you see it turning around?
Yeah, so look, I think it's hard to see why the dollar is going to meaningfully rally in the short term outside of corrections right now, some degree of walk back. Again, to your point, that we've had massive moves. The euro rarely moves 4% in the space of a couple of days in the way that it has. Like, it's almost, unheard of. So I think vol is very elevated. I joke that when banks are sending out lots of sell dollar recommendations, it probably means we're getting close to a fade. But the reality is that, in the medium term, short to medium term, it's hard to see where the market is going to sell dollars. And you think about the amount of dollars that have gone in unhedged into U.S. equity markets over the course of the last 15 years or so, it's natural that you're seeing some repatriation away, which I think will continue from real money players, sovereign wealth funds, as they think about longer-term planning on the next 4 to 8 years. Remember, we could advance in 4 years' time, so this administration could continue. I think that has more medium to longer-term effects where ultimately the dollar probably won't be as strong as it has been in the last cycle.
Yeah, so interesting to chat to you, Mitesh. Thank you so much for coming on the show today. Mitesh Parikh, Global Co-Head of Discretionary Macro and Fixed Income at Schonfeld. And still ahead, Lebanon's cabinet approves a draft law to restructure the banking sector. We speak exclusively with the Economy and Trade Minister, Amer Bisat, a little later in the show. But first, U.S. Energy Secretary Chris Wright says global markets can tolerate squeezing out Iranian oil exports. That interview next. This is Bloomberg. U.S. Energy Secretary Chris Wright says that power prices will be lower under the current U.S. administration than in the prior one. Wright told Bloomberg that the size of the global oil market today means the world can tolerate squeezing out Iranian exports.
His agenda can be summarized as prosperity at home and peace abroad. Lower oil prices help both of those. And the peace abroad that's of most concern right now in the region where I am in the Middle East is Iran. During the Biden administration, oil prices were higher. There was sort of an appeasement attitude and no strong enforcement of sanctions, enormous funding to Hamas, to Hezbollah, to the Houthis, and a rapid advancement of their nuclear program. President Trump's agenda is exactly the opposite of that. It's peace through strength, but we simply cannot and will not accept a nuclear-armed Iran.
Well, when it comes to Iran, we saw even more sanctions on the regime yesterday. When it comes to these oil sanctions, the president has said he wants to go back to maximum pressure. Is that part of the conversation you're having with Gulf allies on this tour, that they'd be willing to step in if some of those Iranian barrels come off the market?
Well, fortunately, just from the United States production itself and the size of the global oil market today, absolutely we can tolerate squeezing out Iranian exports. And of course, do all the Gulf neighbors want the same thing we want? Yes. Do they fear a nuclear-armed Iran? Absolutely. Do they think now is the time to turn the screws and end Iran's nuclear weapons program? Absolutely. But yeah, can the world tolerate that? Absolutely. 10 years ago, 20 years ago, could this have happened? No. But today we both have large American oil production, better relations with our neighbors, and a strong, resolute leader. In 40 years of trouble, 45 years of trouble from Iran, we've never had a better chance to reduce Iranian power, reduce Iranian tyranny in the Middle East, and we don't want to miss that opportunity.
Mr. Secretary, the president has said a lot, even recently to me on Air Force One. He likes that oil prices are coming down. Do you and the president have a price in mind?
No, I think my whole life I've avoided predicting prices or dictating prices. You know, we have a wonderful free market economy. That's what makes the world wealthier. That's what allows consumers to continually re-express choices in every direction. So no, there's no formula for a good oil price.
U.S. Energy Secretary Chris Wright speaking to Bloomberg U.S. in Abu Dhabi while on a tour of several Middle East nations. Now, coming up, backing down, South Africa's ANC set to scrap a proposed VAT hike after opposition. We're live in Johannesburg with the latest. This is Bloomberg. South South Africa's biggest political party is reportedly set to back down from a plan to increase VAT. That's after other parties indicated they would not support it. Our chief Africa correspondent, Jennifer Zabazaja, is in Johannesburg and joins us now. I mean, Jen, this budget has been a bit of a saga in itself. What do we know about the latest round of discussions and what the ANC are thinking vis-a-vis these potential VAT tax hikes?
Right, Jumana, this was really the sticking point when we first heard about the budget earlier this year, when the ANC was not able to actually table the budget because of the disputes about this VAT tax. Now we're getting indications that they don't even have a partner now on board within the GNU, the Government of National Unity, or outside of it, who wants to sign up to this. And it sounds like really what happened over the past few days is that the ANC was looking for a coalition partner to sign up to this 0.5 percentage point VAT increase for the first year, and then another 0.5% for the second year. And it doesn't look like any of these parties want to sign up to this VAT increase. And namely, the Democratic Alliance, which was really the main opposition party for most of the past few years, has been very opposed to this and does not believe that this is the way to increase in revenue for the government. And so it's seeming like, as you were mentioning there in the intro, the ANC is going to have to scrap this entirely, but then presents another problem for the finance minister, and it is, where do you get that 13.5 billion rand hole that they were trying to fill with this VAT increase? And so that is really the next question here. What is going to happen now, now that the ANC does not have a partner signing up to this VAT increase?
Yeah, what are the key things that we should be watching over the next couple of weeks then, Jen?
It's really going to be key to see what Finance Minister Enoch Godongwana is going to do now. If, in fact, this is put to the side, then he is going to have to find other sources of revenue. And if you just take a look at, over the past few days or so, I've been listening to a lot of the discussion around here in South Africa, and many people believe there are other options to find this revenue. One of the main opposition points to this VAT increase is that this is an economy where South Africans are already struggling, and revenue service has not been, or tax collection, excuse me, has not been efficient over the past few years. So maybe the actual way to plug this hole is fixing some of these other parts of the government and finding ways to get this revenue that many people believe is there, but just has not been efficiently collected. And so it will be key to watch what we hear from Godongwana over the next few days. And also, of course, the Democratic Alliance, because they have been opposed to this from the beginning, what they say, and maybe some other options that they have on the table, because they have said that this VAT increase is not the way for the government right now.
Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. Well, coming up, we discuss the state of Lebanon's economic recovery as well as the Trump tariffs with the economy minister Amer Bisat. Our exclusive interview next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Tech tariff pause. President Trump exempts phones, computers, and popular consumer electronics from his 125% China tariffs, but says it's only temporary and a different levy will soon apply to the sector. Talks extended. Iran labels its first formal discussions with the Trump administration over its nuclear program as constructive, with the two sides to meet again in a week. And in just a moment, Lebanon's economy minister Amer Bisat joins us exclusively for his first international media interview since taking the role to share his economic outlook and discussions with the IMF. Well, it's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. Let's get you up to speed on these markets. Hopefully you're ready for another big trading week after recovering from the volatility of last week, which surprisingly, by the way, saw a massive rally by the end of the week for both the S&P and NASDAQ. The S&P ended up 5.7% firmer over the course of the week. The NASDAQ up 7.3%. So yes, it felt like a really difficult week to get through. But by the end of the week, equities actually were a lot higher than where we were were obviously at the beginning of the week with the tariff scare, and then with that Friday announcement that there were going to be exemptions for certain sectors in the U.S. economy. That was later walked back. So still a lot of uncertainty. But S&P futures, NASDAQ leaning towards the green this morning. European markets up 2.5%. The futures indicating another strong open there. And then Asia Pacific, for the most part, the handover has been pretty positive as well, up 1.7%. Keep an eye on the yuan fixing. We were speaking about that earlier. The fix is now above 7.21, levels not seen since 2023. So the currency is still one form of how China are countering these tariffs. Let's switch over, though. A lot of focus last week on the price action and fixed income. Take a look at U.S. Treasuries today. The 10-year trading at 4.46. We are about 3 basis points lower, so stabilizing, but still up about 40, 50 basis points over the course of last week. And many investors are saying key to stability in broad financial assets is what happens with these bond markets. So from here onwards, the direction of travel for 10-year yields and whether it's going to be orderly is going to be important for market direction and sentiment. The euro also still benefiting from outflows from the USD. Today we're trading close to 114, now 113 versus the USD up about 0.2%. ECB meeting coming up this week. A rate cut is baked in, but watch out for language on growth and inflation. How those tariffs are going to be impacting the European economy. And then Brent also sitting just shy of $65, close to a 4-year low. So we continue to see downward pressure. Once again, Goldman Sachs putting out a note saying that they're bearish on the price of Brent and WTI looking ahead because of the market being oversupplied. And then finally, gold continues to do well. All that glitters is gold. It's close to all-time record highs. 3,230 is the mark this morning. Now, Lebanon's cabinet has approved a draft law to restructure the country's banking sector. Still subject to approval by parliament, the legislation would prioritize the rights of small depositors. The government says this will support economic recovery and instill confidence. Joining us exclusively now for more is Lebanese Economy Minister Amer Bisat. Minister, it's really good to have you with us on the show. I want to start with the big topic that everyone around the world has been talking about, and that is tariffs. And the fact that even a small country like Lebanon was not immune to the Trump administration's decision to impose 10% tariffs. How is Lebanon poised to deal with just another potential shock to the system?
Absolutely. Good morning, Joanna. It's a pleasure to be on your show, and indeed my very first international appearance since I took over. Listen, I mean, this is an amazing reminder to the Lebanese and to most small countries that we live in a very large world that really matters. We tend to spend so much of our time focused on our own internal problems. But then there are two impacts. One, our exports to the U.S. themselves are not being taxed. Incidentally, not taxed as much as other countries, which is a good thing, but they're still taxed nonetheless, and that's going to have a competitive issue. But I think the more important one is we're watching very carefully what's happening to the global economy. We are extremely integrated. A global recession, if it were to happen, will be impactful for us. Lower oil prices, fairly large impact for us, given our presence of our international diaspora relatives in the Gulf. These things do matter. These things matter, and we're watching them quite carefully.
Yeah. Well, let's turn to the, I would say, priorities of the new Lebanese government and yourself part of the government, of course. Of note is you've restarted discussions now with the IMF. We know that the spring meetings are taking place in the IMF in a couple of weeks' time. Can you give us more color on exactly what sort of financial package, what sort of assistance Lebanon is seeking this time around, and how it differs from the staff-level agreement from 2022?
Absolutely. Listen, I mean, at the end of the day, and I say this with complete genuineness, this is not meant to be an IMF program for the sake of having an IMF program. This is meant to develop, articulate an economic plan that matters for the country itself. I'll come back to the details in a second. But what is the objective? I mean, always start from the very end. And the objective is growth, is bringing back this economy back to the prosperity that it deserves. The idea that Lebanon today has a per capita income of $4,000 is unacceptable. This country should be significantly larger, significantly more productive. And everything we're doing is not to make the IMF happy, much as we would like to, of course, but also to put the economy back on a path that brings back to the Lebanese what they need. Right? What does that mean? These are the files that we're going to be talking about. There's going to be the file of medium-term fiscal sustainability. The government has to grow. The government has to come back to health, and that does have implications in terms of debt. It's a country that has significant sectoral dislocations. Electricity, as you know, it's a shame that the Lebanese get only 6 hours of electricity. This is absolutely impactful for producers. We need to make electricity more present and cheaper. There is the issue of, and that's probably the more important one that we'll be talking about, which is the financial sector. Lebanon has had a crisis in 2019. People have lost massive amount of their deposits. And that requires some urgent effort. And this is part of the priority that we're working with them and with the government with IMF, trying to implement articulated plan there.
Yeah, so let's talk more about that because a banking bill was passed over the course of the weekend by the cabinet. First of all, is it your expectation that that cabinet bill is going to be approved by Parliament? And just as a follow-up question to that, the government has talked about the fact that you don't want to see losses imposed on the small depositors. How technically feasible is that? Where are the distribution of losses going to come from?
Absolutely. So let me sort of step back, if you don't mind, and articulate a little bit of a work plan or a vision of how we're thinking about this. We're thinking about it sequentially. The decision is that you go step by step. And there are 3 steps that we're thinking about. And we've been in power for only 2.5 months, and we've already done 2 out of the 3 steps. The first of which is we need to categorically remove bank secrecy. Bank secrecy is a constraint for information gathering. Bank secrecy is needed in order to removing bank secrecy. So important to figure out the size of the problem and the issues that are associated with it, right? This is something that we've approved in the cabinet, is with the parliament. We're working very closely with the parliament, and we have some confidence that over the next few weeks they will actually pass it. The second step, which is the one we approved this last week, that's an important, extremely important step, is to set up a structural legal framework that allows the government and the central bank to deal with financial crisis, whether it's this one, the major one we're working through, but more importantly, the future one. Lebanon was one of the few countries that never had that framework. This is a very simple and, dare I say, boring. It's a step-by-step approach, a menu approach of when you get into a crisis, who deals with it, how do you form it, how do you think of the auditing, who do you decide, who makes decisions, what are the appeal process? Fairly boring, but extremely important. The third step is the one that you asked about. We're going to take our time, right? This is the one when you come up with a plan, a final plan. Depositor protection is an extremely important part of the objectives that we have in place, right? That may require instruments, that may require delays or some time passage in order to pay some of these. But the idea is that nobody would lose their deposits. But it may take time, it may take some effort with different structures.
But Minister, the losses in the system are estimated to be as high as $70 billion. That's multiples of Lebanon's GDP. Can you just clarify if you're expecting both the bank shareholder participation alongside the state to deal with the distribution of these losses? Is it going to be both private sector and state?
Absolutely. I mean, the important thing here is to keep in mind is that this is still a plan that is being discussed and prepared. And for the sake of clarity, this is a joint effort. It's being run by the Minister of Finance. We have a new central bank head, and the effort is being... So part of this is being discussed. So it's too early to get into too much detail. But there are certain principles, right? One principle is that this is not going to be imposed. This is something that has to come after consultation. The second is I do feel it's a distraction to spend too much time thinking about one winner, one loser. This is a fairly large effort that requires some form of collaboration. And the collaborations have to be among the stakeholders, the banks, the central bank, but also the government itself. There's a limit to how much we can impose on each of them. The banks need to survive. The banks need to grow. The central bank needs to conduct monetary policy, and the government has to be contained within some form of debt sustainability. Spending too much time on being precise at this point can end up throwing one into distractions. The bottom line here is within the objective of figuring out a solution to the debt that does not, to the depositors that does not, a fair solution to depositors while maintaining the health of the banking sector and creating some form of a collective solution is what the principles would be.
Minister, all of this is very important in terms of figuring out the Lebanon economy direction. But of course, many people around the world are concerned about the security situation and the potential for the ceasefire to actually keep holding. What is the government's assessment on the longevity of the ceasefire with Israel right now? Because there have been several violations over the course of the last couple of weeks. And how important is it to have political security for your economic plans to be enacted?
I want to be sort of more broad about this question, because this is honestly quintessentially a political question. But what is very clear, and to contextualize it, is that without economic security, without sovereignty, without the monopoly of the state over all of its land and of its arms, it's very difficult to see economic growth progressing. This is one constraint. There are multiple other constraints that I mentioned, right? We need to work on sectoral development. We need to work on infrastructure. We need to improve the state as an enabler of growth, as we were talking about. We need to improve the financial sector and bring it back into health. We need to bring back investors. One of the things that we're really focused on is having an investor conference in September that showcases Lebanon and tells the world Lebanon is back in play, Lebanon is back in business, the private sector has to come back. So there's multiple issues. Security, politics is certainly one of them. I don't want to underestimate it, but there are many other files that we need to work on to bring back the country to the prosperity it deserves.
Yeah. Minister, thank you so much for your time this morning. That was Amer Bisat, Lebanese economy minister. And coming up, Iranian and U.S. officials hold their first formal talks in Oman to discuss limits on Iran's nuclear activities in exchange for sanctions relief. We'll have the latest on the meeting next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Amer Bisat in Dubai. Iran and the U.S. held indirect talks in Oman on Saturday that lasted for more than 2 hours. In the first top-level conversation between the nations since 2022, they discussed Tehran's nuclear program and the lifting of sanctions. Iranian Foreign Minister Abbas Araghchi said the U.S. Special Envoy Steve Witkoff spoke briefly after the talks. Now, joining us now is Burcu Ozcelik, Senior Research Fellow for Middle East Security at RUSI. Well, both sides described the talks of the weekend as, quote, constructive, hinting that there may be a continuation of talks to come, perhaps in the next week or so. Did we learn anything more about what may be included in the scope of a potential deal if it does come to fruition?
Well, good morning. I think what we've learned so far is that, as you've said, this seems to have laid the groundwork for future talks. So this is the beginning of more conversations to be had over the next few weeks and potentially months. The issue is that we don't know enough about what exactly was discussed, but it appears to be promising in that the U.S. envoy, Steve Witkoff, doesn't look like he demanded anything that the Iranians would say that is a red line. We are not taking this any further, and vice versa. So this appears to have been a good first step, but the real work must begin now, and as soon as later this week is what we're hearing.
And of course, this is the very same president who pulled the U.S. out of the JCPOA back in 2018. What is incentivizing President Trump to return back to the table again? And of course, it was only after 2018 that Iran accelerated the uranium enrichment process. So why does President Trump want a deal this time around?
I think there are motivations on both sides. The timing seems to be ripe for a deal to be had. There are skeptics on both sides, certainly, and still a potential for spoilers who see more of a disadvantage to pursuing a deal. Iran has been severely weakened over the course of the past 18 months in the war in the region, of course. And so for many hardliners and the conservatives, and also for mainly Israel as a state actor in the region, this seems to be a time to really go after, in more harsher terms, terms Iran's nuclear program. But in terms of why it's a good opportunity for a deal, President Trump, I think he is in need of a win right now, and an agreement where Iran, in principle, perhaps would agree to not pursue the possession of a nuclear weapon or the weaponization program. This might offer a low-hanging fruit in terms of a win for President Trump's team, but it will be very difficult to get to that point. So this actually is not an easy one on which to get a win. It's highly technical. It will be a complicated, complex process. But it just depends on what the United States is willing to count as a win on this.
Yeah, but again, going back to what I said, they're so close to being able to create a nuclear bomb, an atomic bomb. And that's why many critics and more hawkish voices, and of course Israel, have called for complete dismantling of the nuclear program, something that Iran has said is a non-starter. How likely is it that if there is an agreement, there's going to be sufficient monitoring in place that would satisfy the hawks' demands?
Well, Iran has been crippled economically. The impact of the U.S. primary and secondary sanctions have been severe in the lives of ordinary Iranians. So there is upward pressure from the grassroots level on the Iranian regime to be able to come home with a package of sanctions relief. So this is serious in terms of the popular demand. Views, of course, are divided inside Iran as well, both at the public level and across the political establishment. But in terms of the desire for a deal, I think there is sufficient momentum there. But Iran would have to make, the officials would have to make certain concessions, agree to strict verification and monitoring mechanisms, reducing its stockpile of enriched uranium, and agreeing not to pursue weaponization. Whether the Trump administration's team adds other provisions to what a deal would look like, such as Iran's ballistic missile program, its support for regional proxies, that's yet to be determined. But it seems for now, the messaging from Washington is that this is going to be a more narrow scope for negotiations that focuses on Iran's willingness to step back from weaponization.
Yeah. Very clear. Burcu Ozcelik, Senior Research Fellow for Middle East Security at RUSI. Thank you so much for waking up early for us and coming on our show to discuss an important meeting that took place over the course of this weekend. Now, coming up, Goldman in the docket. U.S. bank earnings continue today. We look at what to expect. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Amer Bisat in Dubai. KKR has appointed former U.S. General David Petraeus as chairman of its Middle East franchise. The firm is setting up a local investment team and is the latest major private equity firm to bolster its presence in the oil-rich region. Petraeus is a former CIA director and commanded U.S. troops in Iraq and Afghanistan. He's expected to leverage his Mideast contacts to strengthen KKR's ties with officials and deal makers in a region with wealth funds that controls trillions of dollars. Now, Wall Street banks continue to report earnings with Goldman Sachs' results out later today. Bloomberg's Charlie Wells is here with an update. Charlie, two things stood out to me from the earnings on Friday. Number one, what a stellar quarter for equity trading for so many of these U.S. banks. But at the same time, all of these CEOs, including the likes of Jamie Dimon, talking about uncertainty in the months to come because of everything that's happening right now with tariffs and geopolitics and real questions about the path forward for the U.S. economy. How do we expect that to show up in today's set of earnings?
Giovanna, so the theme should be relatively similar, right? This volatility that we've been seeing over the past few weeks really should bode well for those Goldman traders, particularly on the equities front. But I think a question here, too, is have we reached peak volatility? Are we getting to the point where some of that kind of market turbulence is maybe not going forward going to help traders quite as much as it has in the prior quarter? And that gets at the major theme that we're kind of picking out as we hear these CEO comments in these calls, is is that there's a projection of strength, but also an admission of fragility. And you heard that, on Friday from Jamie Dimon talking about stormy seas ahead, being in the crosshairs of this trade war, but also having the ability to see it through, to deal with what's going on here. You heard Ted Pick talking about how deals are on pause, not delete. And that's the theme we're also going to want to look out for with Goldman. What is their deal pipeline looking like going forward?
Yeah, and Goldman obviously coming up today, so we're expecting to see, I would think, perhaps similar strong numbers on trading, but not so much on deal making, right? The first quarter hasn't really panned out the way many of these senior executives thought it was going to pan out.
Jumana, there was so much optimism after that Trump win in November that there would be deregulation and that this would unleash animal spirits in that deal-making market. But we've just seen, in this uncertain environment, we've seen M&A activity on pause. We've seen a number of these IPOs that were slated. Some of the biggest, most hotly anticipated IPOs for the year, those have been put back on the shelf. So it's going to be interesting to see how Solomon talks about the deal pipeline when he comes online in that call, because there are certainly going to be a lot of questions about how that deal-making pipeline, which is so important for this bank, how that's going to shake up amidst all of this volatility.
Yeah, a big question, not just for the banks, but for pretty much every single CEO out there. Nobody really knows how all this is going to shape up or square up in the coming months. Probably not even the president himself. Charlie Walls, thank you so much for the reporting there. Let's take a look at how equity markets are faring, though, because there is green on the screen, picking up from a better close to Wall Street on Friday, of course. S&P futures, NASDAQ, both up more than 1%. Take a look at European markets. Those also seen opening up firmly in the green, up 2.4%. So positive risk sentiment. Keep an eye out, though, on fixed income and how it does this week. That's Horizons Middle East and Africa. I'm Johanna Bisat in Dubai. Stay with us for Daybreak Europe.